And what we did is we went ahead and we made sure that we were watching the faster feed, and we're trading all our funds. We trade 80% of our capital on the slower feed. And then as soon as the non-farm payroll came out, we used to have jumps like 200-300 pips at a time, which is huge. Non-farms have not been the way that it was back in 2001, 2002. We used to do a lot of arbitrage on different platforms. So what we do is you take one platform, we'll trade it, and we'll trade and follow a faster price update. So you got a platform that really updates their price and follows the market very closely, but then you get some platforms that were lagging behind. And non-farm payroll used to be the most exciting thing. We used to trade once a month, and that was non-farm payroll.
Yeah.
And what we did is we went ahead and we made sure that we were watching the faster feed, and we're trading all our funds. We trade 80% of our capital on the slower feed. And then as soon as the non-farm payroll came out, we used to have jumps like 200-300 pips at a time, which is huge. And then what we do is when the platform that's quick moves, we then go ahead and have the buy and sell button ready, and we'll go, okay, buy, and we'll go buy, and we'll pick a US pair, and we'll go buy or sell. And within seconds, we'd be in the money, and we'd go ahead and we keep watching the fast feed. And when the fast feed drops, we'd go ahead and sell and get out of that position. And we used to make so much money just trading once a month with non-farm payroll.
Do you mind if I jump in? Sorry to interrupt, Gary.
Yeah, go ahead, Phil.
Can you see my chart, please? For those of you who are watching this, who are more of speculative nature and you want to be in the trade right now, there is a very simple setup that you can repeat very easily across a range of the markets. As Gary was saying, this is an alternative to possibly trading non-farm payrolls. So this is dollar yen in 15-minute time frame. You can do something that's called volatility breakout. And a long time ago on a prop desk, we used to do this kind of stuff with the S&P E-minis and so on. But this is dollar yen. So we can also place another trade from the intraday point of view. We would identify this trading range. This is a 15-minute time frame. There's a trading range here, and we can have a long order at the breakout of these resistances up here at 122.70 with a stop loss just below this range here at 122.20 with the view to take profit somewhere higher. But this can be done very quickly in a manual way. And then we can also have a short order just below the cluster of these lows at 122.30 with a stop loss at 122.90 with the view to take profit down here at 121.50. So this would be one cancels the other, and this is done. One of these orders will be triggered very quickly. Sometimes you get stopped out twice. I said it's more speculative, but if for somebody who wants to front run major news, this is the way to do it.
Okay. Yeah, and Phillip, I don't know, man. That strategy was applied. We applied that back in 2000 and 2001 and 2002 when we really had good breakouts. Non-farm payroll hasn't been that exciting. In fact, most fundamentals today are really not that great to trade and try and run, because in the time that we were trading back in 2001, 2002, there used to be a broker rule, and that was guaranteed your entries. That means even on your pending orders. So if you use limit orders or stop orders, you would get guaranteed. In fact, they even guaranteed your stop loss. So even if you had a stop loss placed, and that's why we used the 80% of capital.
Long time ago.
Yeah, but this is the thing. The brokers guaranteed us stops, but then when they changed the rules and they said like, well, we're not going to guarantee stops, but we'll fill you at the next available price, that became a problem. Because you can get caught up in a trade that you move your stop up, and then the market gaps a certain amount that doesn't protect you, because they'll fill you at the next available price. That could be 100, 200 pips if the news is that strong. So that strategy of straddling the market and looking for that breakout based on volatility, to me, hasn't worked. Have you done that? Have you applied that recently in the non-farm payroll a lot?
As I said, I am usually flat ahead of non-farm payroll. So I'm stating that as a very firm statement. I'm nothing open intraday scalping ahead of non-farm payrolls. But trading the news, maybe some other news, let's say earnings, company earnings, or crude oil inventories, or whatever you trade, central bank interest rate decision, whatever you trade, possibly a strategy like this could work.
Gotcha. Yeah.
Okay.
Gotcha.
Okay.
Yeah.
Cool.
Great.
Yeah, that's interesting. Yeah, and when you apply that straddle move, do you use long-term market direction, or are you just looking for a breakout?
Well, I would normally trade in the direction of the prevailing trend. So shorter term time frame is fading the trend, and that's how I would normally trade. And if I'm scalping from the intraday point of view, my entry is in 15 minutes or 5 minutes, but my trend is 4 hourly, 1 hourly. So that's what I normally do.
Sure.
Front running the news, this is completely irrelevant of the trend, because the news can trigger the sentiment change, and therefore the trend can reverse, or market participants can become influenced by the news, and sentiment changes for a bit. So in this case, one cancels the other order, or if you're quick on a finger and if you have ability to look at the screen, you can change them yourself. You can basically just get out of that trade very quickly. You're looking for a 5-10 point risk for 15-20 point gain. It's very, very quick. It's not scientific in any way. It's very mechanical and without any emotion. You're either going to get stopped out, or you're going to get rewarded very quickly.
Oh, I'm always emotional. I'm going to break some tables and chairs if that happens to me. No, I'm just kidding. Hey, you know what? If I